You're still tuned into Market Fatafat, and this is a show where we discuss all the stocks that are buzzing in trade. And on the technical side, we are now joined by Foram Chheda, founder at Chart Analytics. Foram, thank you so much for taking your time out and joining us here on ET Now. And NTPC, that's the first stock from the power sector that you've spotted for us. Tell us, what do charts indicate for this counter?
Well, hi, good afternoon, and thank you for having me on the show. To begin with the stock of NTPC, if we see that this year, the stock price this year rise from 294 levels to nearly 369, probably in the month of Feb to nearly March. Post that, we have seen the stock price kind of consolidating and retracing almost 50% of its initial move of Feb to March and has been consolidating in a sideward trend. However, we've seen the markets being very volatile, and compared to that, the stock price has remained very much into the sideward zone. And a very strong support is close to around 325, 326 levels. Thus, one can consider holding on to it. And a small accumulation also can be considered those who would like to add in or like to invest into the stock. On the upside, we have 344 levels, which act as a very strong resistance for now from a short-term perspective. Any move above that can trigger some further upside towards the levels of around 363. But for now, it remains a good stock to continue to hold on and these levels to accumulate as the risk-reward ratio turns favorable. Any move below these levels of around 324 should be considered to move out of the stock.
Okay, so that's the view coming in on NTPC, but let's also put the spotlight on Dixon Technology. Now remember, US government at the moment has exempted any kind of tariffs on import of electronic products into the United States. So Dixon Tech for now is exempted from any kind of tariff impact, but despite that, the stock is sitting with a cut of nearly 1.5% today. In fact, earlier in the day, we also spoke to the management and they say that they are not seeing any kind of supply chain disruption on account of additional tariffs that have been imposed. They've planned nearly 1200 to 1250 crore capex for FY26, which will be fully funded via internal accruals. The management also said that they don't have much debt on their books. They are not looking to add on to debt in order to fund their capex plans. They also said that US is a big market, so they cannot de-risk completely from any kind of client exposure that they have to the United States, and backward integration will continue to aid margins for the company. In fact, they said that they are looking to expand their margins by 120 to 130 basis points by the end of this fiscal, and they are eyeing 40 to 50% market share in the Android ecosystem by FY27. So some important management commentary that has come in. The stock, of course, is sitting with a cut of nearly 1.5% as we speak.
All right, it's Dixon Tech sitting with a cut of 1.3%, but let's move to the auto pack. Hyundai is in focus on the back of a note by Citi that is maintaining a buy call with a target price of 2,400 rupees. They're positive in the rural market while the urban demand still remains lackluster. The uncertainty remains on GST restructuring, but lower rate is likely to buoy the demand. They're taking steps to boost market share through product portfolio enhancement, network expansion, especially in the rural area, and the competitive pricing and discounts is also something that they're trying out. The premiumization platform, rationalization and promotional activities are also being undertaken, and they have reiterated a model launch pipeline of 26 new vehicles in the next 5 years. They maintain a double-digit EBITDA margin guidance for FY26. On the back of that, Citi is maintaining a buy call, but right now Hyundai is reeling under selling pressure. It is turned absolutely flat, but in the red nonetheless, with cuts of 0.1%.
Okay, so Hyundai, that one is sitting with a cut in an otherwise weak market also. But let's put the spotlight on ONGC then. Rabinder, tell us, what is the news flow for this oil marketing company?
Well, yes, ONGC is in focus. The company has announced the successful commencement of a natural gas sales from the discovered small field, marking the successful monetization of a Chinewala Tibba gas in Rajasthan Kutch on land exploratory asset. And this significant milestone reinforces ONGC's commitment to enhance domestic energy production and strengthening India's energy security under the guidance of the Ministry of Petroleum and Natural Gas. So, back of this news flow, ONGC is in focus.
All right, that is ONGC in focus. In the back of that, Ashesha, but you have picked out protein for us. Take us through the news flow there.
Well, yes, in fact, Ankita, the stock is soaring in trade today on the back of an order win that the company has informed the exchanges about. The company said that they've received an order worth about 1160 crore from UIDAI. In fact, this is for establishing and running district level Aadhaar Seva Kendra or ASK services. So on the back of this 1160 crore order that the company has won, the stock is soaring in trade today. In fact, at one point in time, the stock was up as much as 10%. It has given up some of those morning gains, but despite that, sitting with gains of nearly 8.5% as we speak.
Right, protein surging away in trade with gains of 8.5% in an otherwise tepid market. But Ravindra, you picked out Hindustan Zinc for us. Take us through the news flow on Hindustan Zinc.
Well, as Hindustan Zinc is in focus, the company in the AGM has said that they have planned to double its production capacity to 2 million tons in the coming years, which is supported by a potential investment of rupees 30,000 crore to 35,000 crore over a period of 3 to 5 years. And the company has announced that the part of the first phase of their expansion will be setting up a new integrated refined metal smelter with the capacity of 250 KTPA along with the corresponding scale up of its mine and mills across multiple locations on an investment of rupees nearly 12,000 crore. So back of this, Hindustan Zinc is in focus.
Okay, so Hindustan Zinc can focus on the back of their capacity expansion plans. In fact, they are looking to double their capacity. But let's also put the spotlight on Adani Power then. Foram on the charts. What does this stock suggest?
If we talk about it this calendar year, the stock price was in a range of around 443 to nearly 600 levels. And now the stock price has been hovering at these 600 levels since the last 2 months almost. Now, when we talk about it technically, that the moving averages have also been very much supporting the price, where the price has been moving above those levels, and when it's retracing, it's trying to give support at those levels also. Currently, as we see, there has been a marginal increase in accumulation seen, and an indicator like RSI, that is the relative strength, is showing a marginal positive divergence. Thus, overall, the stock looks good to hold, and in case if you're looking to buy from an investment perspective, watch out for lower levels of around 584 to consider buying the stock. Meanwhile, it remains a hold, and an intermediate target is placed closer to a level of around 624. Meanwhile, the long-term target remains intact towards 675 levels.
Okay, so that's the view coming in on Adani Power, but let's also put the spotlight on the telecom sector and Vodafone Idea in particular. Remember, the stock has been in focus for the last several trading sessions, and a couple of days ago there were several reports which were suggesting that the government of India is contemplating AGR relief for Vodafone Idea. But now we have official confirmation. In fact, the company has also clarified that the Department of Telecom is not contemplating any AGR relief for the sector or for Vodafone Idea in particular. So because the stock has already had priced in the fact that perhaps government could give some relief with respect to its dues, the stock is falling after that clarification that has come in from both the ministry as well as the company. The stock is down nearly 9% on the back of that clarification.
All right, that's Vodafone Idea tanking in trade with cuts of almost 9%. Ravindra, you picked out Gland Pharma for us. Tell us what is the news flow on Gland Pharma?
Whereas Gland Pharma has announced that they have received approval from the US FDA for its ANDA filed for vasopressin in 5% dextrose injection, and the product is indicated to increase blood pressure in adults with a vasodilatory shock who remains hypotensive. And according to IQVIA, the product has had US sales of approximately USD 45 million for 12 months ending June 2035. So back of this news flow, Gland Pharma is in focus, and stock has recovered approx 1%, more than 1% from day's low, but still trades in red.
Okay, so that's the word coming in on Gland Pharma. But on that note, we need to slip into a very short break. We'll discuss many more buzzers on the other side of the break.
Welcome back. You tune into Market Fatafat, where we are taking you through all the stocks that are in focus today. And let's focus then on the paper industry. Now, what is the news flow here? Firstly, the government has imposed a minimum import price or an MIP on virgin multiple layer paper board, and this amendment this amends the import policy under Chapter 48. Now, to weigh in on the issue, we are now joined by A.S. Mehta, who's the President and Director of JK Paper, who's now joining us. Hello, Mr. Mehta. Thank you so much for joining us today. Mr. Mehta, firstly, what would be the impact of MIS made for the packaged papers?
Am I audible?
Yes, you are, sir. Please go ahead.
Okay. Yeah, thank you. See, the impact of the MIP is like this, that the notified amount of the rate, which is 67,220 rupees, that means the import cannot take place at lower than this price. So when the import happens at 67,220 rupees, and the originating country, if that attracts a custom duty, then the custom duty will be over and above this. So, but the board coming from the ASEAN countries where the duty is zero, so there won't be any duty. But the board coming from the any other country other than the ASEAN, there will be a duty on the packaging board coming to the country effective 22nd August 25. And this notification is valid up to or will be in enforcement up to 31st March 2026.
Okay, and sorry, if you can tell us how will it impact pricing in the domestic industry because of this levy that has been announced, and also tell us about raw material pricing trends, especially with respect to pulp and paper prices in the domestic market.
Okay. See, it is very relevant because there was a very cheap or the dumping at a dirt prices from China and Indonesia, and that was troubling the paper industry from last almost 12 months. So, in view of this notification or change in the import policy, there will be certainly a upward price correction in the domestic market, and that so we will figure out the different category of the board, what will be the prices. Now there will be price increase in a few days to come, so that's one. It will be favorable for the paper industry because we were suffering. As far as the raw material is concerned, in fact, last almost 15 to 18 months or 2 years now, we have been suffering for the raw material cost in the country for pulp manufacturing because the wood prices have gone up almost, it has gone up double compared to the wood cost which was 2 years back. So that is also troubling to the paper industry, but it is the wood availability, and the result of this higher prices is because the plantation was not done adequately during the COVID period, and now from last 2 or 3 years the plantation is happening massive. Hopefully in next 12 months time there will be some relief on the raw material cost to the paper industry, but the 12 months are the challenging period for the paper industry for the raw material availability. As far as the pulp prices are concerned, globally the pulp prices have come down, now hovering at around $500 a ton. But since most paper companies in the country, we are integrated player, so I mean we are impacted much more from the wood cost rather than the pulp prices.
Right. So a couple of things there, sir. So the dumping from China perhaps will be taken care of with this, and it is basically the availability of wood now that you're watching out for. But besides that, how do you see the demand trends panning out, especially for the festive season, especially in terms of the packaging? How do you see the demand trends play out?
See, I would say that the India is one market where the demand is growing pretty okay. In fact, last year also we grew something around at 5.7% as the industry, and we expect that the industry will grow at something around 6% now also. And India is the only one market which is growing at that rate in all the segment. Yes, writing and printing segment will grow at a slower pace. I mean, it may grow at something around 3%, but the packaging paper, the growth is likely to be something around 8% plus. So overall, the growth would be close to 6%. And the festive season, yes, the packaging, whether it is the brown boxes or whether it is the cartons, the growth normally the quarter October to December quarter is considered to be a better quarter because whether it is Dashera, Diwali, New Year, Christmas, So, and that should be a good quarter.
Saying that October to December quarter is a seasonally strong quarter for the company and that the growth outlook for the company continues to remain very positive. If you can tell us what are your capacity expansion plans over the next 4 to 5 years, and in what way are you looking to capitalize on the growth opportunity that is emerging for the industry?
See, I mean, we saw that the writing printing, the segment is growing at something around 2-3%. So what we have done, we acquired the Sirpur paper mill in the year 2018. We did all refurbishing and the modification. So that capacity has been added. So in fact, we are producing something around a lakh of 20,000 ton at Sirpur. But after doing some debottlenecking and other thing, I mean, I am expecting that we should be close to 1,40,000 at ton at Sirpur. So additional 20,000 tons should come from Sirpur. That would provide us additional volume for writing printing capacity. Also at our other plant, whether it is the Odisha plant or our Gujarat plant, there also we are producing writing and printing paper. So some kind of improvement, 2 to 5% improvement we will do at these plant also on debottlenecking and improve our volume. But the major addition we did in the packaging board, because we added a new machine which is close to 2 lakh ton paper board machine, and now we are fully using at 100% of its capacity. And this segment is likely to grow at something around 8%, and we hope to further improve the productivity of this machine in the current year. And thereafter, I would say that the maybe next year or thereafter, we will decide on further expansion of the packaging board capacity, because that is one category where we expect that we will have to participate in the growth journey of industry of something around 8 to 9%. So we will take a call on that, the packaging board. But we are growing very well in our corrugation and the monocarton business, because we are acquiring companies in the corrugation field, and today we are the India's #1 corrugation company, and we will do further acquisition. Last month itself we announced the Borka packaging acquisition. There also monocarton and the corrugation is there. So that's one area where we will grow pretty well.
All right. Thank you so much, Mr. Mehta, for joining us. And well, we are completely timed out on this edition of Market Fatafat Forum. And Rabinder, thank you so much for joining us and giving us all the buzzers. With that, it's a wrap on this edition. Shesh and I will take your leave. Thank you so much for tuning in. Don't go anywhere. Market action continues in 80 now.